What if turning just $100 into over $700 was actually possible, not with luck, but with deep data analysis? Specifically, data that tracks the trades of wealthy investors, and possibly even insiders. So in this video, we'll show how we made 680% profit with this strategy. And we'll also go over how we updated our trade now based on new data of unusual option activity worth $2.3 million on EchoStar stock, ticker symbol SATS. Now, the stock just soared over 70% on news of its AT&T deal. Did someone know something early? Did an insider leak the deal? We may never know for sure, but here's what we do know. Our data analysis picked up on it early, before this deal with AT&T went public. And so, on this day, August 8th, before the stock made this big move, which has now gained 103%, we detected and analyzed unusual option activity on EchoStar, and we emailed our members about this unusual trade. As you can see here, this was the email we sent to members alerting them of unusual option activity detected on August 8th. And so we analyzed SATS and went long bullish when the stock was trading at just $26 per share. Now it's trading at $50 per share. That's nearly double. So it's already a very profitable trade because we got in early. And so if you want to start getting full access to these profitable trade alerts, including these email updates, consider joining the membership on our website. We'll put a link here. Keep in mind that if you join the membership through YouTube instead of through our website, we cannot email you because YouTube does not share your email address with us. So make sure to join the membership through our website, where you'll get direct access to the trades of wealthy investors and potential insiders, so you can see what the smart money is doing before the trade becomes highly profitable. Now, speaking of profits, how much did this options trade actually make? Because knowing the exact profit is what allowed us to update our trade with a smart risk management strategy based on the new data. So let's take a closer look at our trade, the same one made by this wealthy investor. These September 19 options at the 31 strike calls and the 40 strike calls, a vertical call spread. This investor bought 4,000 contracts at a price of $115 each. Since options prices are shown here and each options contract controls 100 shares of stock, to get the dollar value, we multiply by 100 or simply move the decimal 2 places to the right. That means each options contract costs $115. And so let's take a look at our original trade using the risk profile graph, analyzing those September 19 options at the 31 strike calls and the 40 strike calls, priced at $115 per contract when we entered this trade. And so on this graph, our profit or loss shows up here, and the x-axis represents the share price of the stock, which is currently trading over here, and the y-axis represents the amount of profit or loss. Keep in mind, this graph already factors in the cost of the trade. That's why you can see that if the stock had dropped down, it would have been a negative $115 loss per contract. But instead, it went up to over here at nearly max profit. So we have a profit of $782 per contract. And so to calculate the profit percentage, we take $782 divided by the initial cost of $115 and then multiply by 100 to express it as a percentage, and that gives us a return of 680% profit in just a few weeks. And so this is yet another real-time example of how we keep winning using data-driven analysis and trading strategies that track the trades of wealthy investors. Because understanding where smart money flows gives us deep insights into potential stock moves in the market. The rich often have better access to information, sometimes even leaked insider information that help them make smarter, better financial decisions. It's no secret that the rich get richer when they trade based on deeper insights. And so, if you want to get access to more of these insights from the rich, then just head over to our website. We'll put a link up here where you can see exactly which stocks wealthy investors are trading on Wall Street and when they're doing it, so that you can have the same opportunities as the rich. Because if the rich get richer, why shouldn't you? Now, with that being said, not all trades by wealthy investors are winners. Some end up as losses. That's the reality of trading. No one wins on every trade, but just one of these winning trades like this can offset several losing trades and drive long-term growth, making a significant impact on our overall net profitability. For example, we could lose 6 trades in a row, capped at 100% loss each, and still be up positive by a 80% net gain, thanks to just one winning trade like this. Now, if you've been following our work, you know that we do not lose that many times in a row. In fact, it's usually the opposite because we win a lot more trades. But the point is this: too many people obsess over win-loss ratios. What really matters isn't how often you win, it's how much you make when you do win. Maximizing gains on winning trades and minimizing losses on losing trades has a far bigger impact on your bottom line than chasing a perfect win rate. That's the edge we focus on. And so, to stay consistently profitable over the long run, we use strategies with a better risk-to-reward ratio to maximize profits and minimize losses. So as a real-time example, let's go over how we used new data to update our trade here into a strategy that gives us more upside potential while keeping risk under control. As you can see here on the options time and sales tape, on August 26, our original trade for the same September 19 options at the 31 strike calls and the 40 strike calls were being traded multiple times. These are closing trades to take profits. That wealthy investor we've been tracking was closing out of these trades to take profits. And so that's what we did as well. But we also opened a new trade. As we can see here, on August 26, at around 10:56 and 10:53, these December 19 options at the 50 strike calls were being traded. 2 transactions were made for the same options at about the same price of $8.30 each. And so we can calculate the total cost this wealthy investor spent by multiplying the price per contract by the total number of contracts traded. Since these trades were for the same options, we can add up the quantities: 2,250 plus 544, which equals 2,794 contracts in total. Next, we multiply this by the price per contract, $830. So this equals a total value of approximately $2.3 million for this new trade. And so we targeted these 50 strike calls for our risk management strategy by rolling into them from our previous position. As you can see here on the option chain, for the September 19 options, we closed our trades, the vertical call spreads, by selling to close the 31 strike calls and buying to close the 40 strike calls, locking in profits and rolling to a higher strike price and a later expiration date. So you can see here, we have a new position for the December 19 options at the 50 strike calls, the same options we just saw on the options time and sales tape. But remember, we used our gains from our previous position to buy these call options, which cost less than the amount we sold the previous position for. That means we entered this new trade at a credit, not a debit, reducing our risk by using profits from our earlier trade. And so when we analyze our trade now, you can see here on the risk profile graph, the buy positions cancel out the sell positions because they are the same September 19 options at the 31 strike calls and the 40 strike calls. So we are just left with the 50 strike calls that expire December 19. And so on the graph, we can see that if EchoStar stock goes down, our trade would not have any negative loss because we've locked in our profits. This is how we manage risk by minimizing losses while still giving us the chance to gain more profits if the stock moves higher. But keep in mind, this was only possible because we followed a smart, wealthy investor early, back on this day. So if you want to get access to our analysis and trade alerts, just like this one a few weeks ago, before the stock made this big move, then sign up on our website. We'll put a link here. Because the next time a wealthy investor makes an unusual trade, you'll want to be in early, not chasing after the rally. As always, please like, subscribe, and until next time, let's keep tracking the trades of the rich so everyday investors can profit too. Take care and have a wonderful day.